Welcome to Market Matters. I'm Khoo Chong. I'm joined, of course, by Charlotte Chong. Merry Christmas. Happy New Year, everyone. Now, of course, the KLCI today, Charlotte, closed up 1% or 15 points to 1685 points. It's flat for the month of December, however, but it's still up 3.4% in the last fortnight, which goes to show that maybe there's a Santa Claus rally going on.
Do you think that it would actually increase to as much as the level that we saw in the beginning of this year, 1,700?
Yeah, I mean, we're still down for the year. So, I mean, all signs point to a rosier Jan and Feb. Hopefully, I mean, at least CIMB thinks that we're going to have a great 2016.
Today, volume was at about 1.95 billion shares, slightly lesser than the normal market trading day. Value was at about 1.8 billion ringgit. Gainers, we saw Axiata, Inari, Emerton, and Air Force. Decliners was VS, Hapsing, and Supermax. To date, KLCI has actually dropped about 4.5%. Afin Huang came out with a report saying that local stocks are expected to trend higher because ECB hints more stimulus despite recent US rate hike.
Of course, so hopefully the stock market is positioning for 2016 rally, as for example CIMB expects. The regional markets though have been hit a little bit in the last couple of days by weak Chinese industrial profits data. Down 1.4% in November, the sixth straight month of year-on-year declines. You know, they're closely watched because they're a good gauge of the state of the Chinese economy.
But even though what you say is true, hit by weak industrial profits data from China, most of the ASEAN markets are up today after crude prices took back some lost ground. But crude prices is still under pressure. It was traded at about $36 a barrel. For both Brent and West Texas, yes.
Yeah, so of course the region did have a slightly update today. The Nikkei was up by 0.6% to 18,982.23, and the Shanghai Composites up by 0.9% to 3563.74 points. Let's move along, Charlotte, to our hot stock of the day, and it's Iskandar Waterfront City Bhd. They closed up 7.4% to 102. The stock, though, has been under pressure like the Queen song the last 12 months. 19.4% down on a one-year basis and 21% on a year-to-date basis. But the Bandar Malaysia news flow from today was a bit of a white night for the stock.
Yeah, so what happened was the Financial Daily ran an article this morning saying that Iskandar Waterfront Holdings Bhd is actually the favoured bidder of the two final shortlisted candidates to buy 1MDB's 60% stake in the Bandar Malaysia. Do you know how much it's worth for this parcel of land in Bandar Malaysia?
Well, there's two bids, and of course I just want to point out that this is a negative momentum stock by the Edge Research. There have been two final bids down from 40 at one point. The two bidders, of course, is Tan Sri Lim Kang Hoo of the Iskandar Waterfront Holdings, in which he's a partner with the Johor State Company, KPRJ. The other bidder is Tan Sri Desmond Lim of Pavilion, and he's got some Qatari money behind him. Both of them have lodged, for example, Tan Sri Lim has lodged a 13 billion ringgit bid, whereas Tan Sri Desmond Lim has launched a 15 billion bid.
Well, the thing is, right, probably 1MDB could actually choose Desmond Lim compared with Lim Kang Ho because they are actually they're debt-ridden company, isn't it? But the thing is, right, I believe that they want Mr. Lim Kang Ho to be more involved in this development because he is very influential in Johor as well, because his company is backed by Johor government.
Yeah, of course, our KPRJs, they're partners in this kind of waterfront. They've also got CRCC, the Chinese construction company. They are front bidders for the high-speed rail, and of course in Bandar Malaysia, that's the culmination of the high-speed rail. So, I mean, of course, whether it's Desmond Lim or Lim Kang Hoo, that 15 or 13 billion ringgit is going to be great news for them in terms of pairing their debt, because they've got about, 35 billion ringgit left over after selling their Edra Power assets to the CGNC. So, to take it all home, Charlotte, Iskandar Waterfront City Bhd up on speculation because their 47% owner, IWH, is speculated to win the Bandar Malaysia land bid. Of course, Bandar Malaysia is a 486-acre block of land and prime real estate in the central business district of KL, with natural synergies in the high-speed rail, commercial and residential development. However, Tan Sri Lim Kang Hoo's 13 billion, 13 billion ringgit bid is 2 billion short of rival Tan Sri Desmond Lim's 15 billion ringgit bid. Let's move along to stocks with momentum, and it's Well Holdings Bhd. They closed the day 7% higher, or 14 cents to 209. Again, this is another negative momentum stock by the Edge Research. They are one of the world's biggest makers of screws, nuts and bolts in the world. They're in fact the Penang-based carbon steels fasteners manufacturer.
So I think probably the algorithm is trying to tell us that it has been running up too much. And this company, their products are primarily utilized in highway guard rails, power transmission towers, and furniture and other applications as well. The group has currently manufactured and supplies fasteners to 8 customers in Europe, and their biggest client is actually in Europe. About 76% of its products are exported in foreign currencies. So clearly, they are one of the beneficiaries for US dollar.
The manufacturing exporter line. Guess who's one of the biggest shareholders? Khoo Yu-yin.
Yeah.
Okay, anyways, in terms of their outlook, last month the executive director, Sai Chi-yun, said she sees a revenue boost from the DIY segment out of Europe, and of course the European segment will drop to about 50% of business from about 76% now, because the domestic business is also increasing because the local buyers are migrating from more expensive foreign markets to local markets. In terms of the financial performance, net profits doubled on consolidated profits from their Vietnam and foreign exchange gains.
Now, first quarter net profit, like what you say, it has doubled from Chinwell, Vietnam, and foreign exchange. There, like what you say, revenue was up on higher sales of trading goods in Malaysia and sustained sales to the Eurozone. I think what is more interesting is that just now you mentioned that because of the strengthening, because of the weakening of ringgit, a lot of companies, they don't buy, a lot of hardware companies, they don't buy from China, from countries like China or overseas. They buy it from the local manufacturer like Chinwell. That's why Chinwell see a lot of sales bumping up for the latest quarter.
Yeah, exactly. So local hardware buyers are instead going to Chinwell, the local guys. We don't travel maybe to Singapore or to Hong Kong anymore because the ringgit is so weak. We just chuti Malaysia, right? So it's a sign of the times. So in summary, this is stock Chinwell that has picked this negative momentum by the Edge Research. 3/4 of their products are exported in foreign currencies, and Europe is its largest overseas market, but the domestic business is picking up thanks to migration of the local products due to ringgit Malaysia depreciation.